Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey everyone, welcome to the Real Estate Pros Show. I'm your host, Erika, and today I'm thrilled to be joined by Bill Halick, the founder of Aceland Mortgage. He and his company are a powerhouse in the industry. Bill, it's awesome to have you on the show today.
Thank you so much. Pleasure to be here. Very cool.
Yes, we're so excited. So let's dive on in. Bill, for those who aren't familiar with your world, give us the rundown. How did you get started in the real estate and lending space, and what's the story behind founding Aceland Mortgage?
So I was a history and pre-law minor in college, and I had studied abroad in Spain. I came back. I really wanted to try to figure out what I wanted to do. I wasn't sure, but I was very interested in real estate. For some reason, I don't know why. It just was something that always was interesting to me. And I thought, if I want to learn how to buy real estate, I should probably learn how the financing works, since those two are kind of the, two sides to the same coin. So, in my last year of college, I had set up a cooperative education co-op program with a mortgage company. They didn't have that available, so I went and kind of set it up with the school and with the mortgage company. Guy's name was Frank Curie. Shout out to Frank. I'm still in the business. Great guy. We're friends. We still talk. I just talked to him the other day. And, that's kind of where I got my start. And, I parlayed that into a job at a company called Foxtons, which was a real estate mortgage company in the early 2000s. They were offering 2% real estate commission, basically a disruptor, a long time ago in real estate. Be another great Harvard Business Review or a podcast episode. So I was there for a couple of years. Then I was over at JP Morgan Chase doing wholesale lending as an account executive. My clients were all over the Northeast, New York, Jersey, up to Maine. It was a good territory, good place to work, great people there as well. Then I started this company. It was a different name at the time. It was called the Celtis. And I ran that company. We started that company in 2003. I was pretty young, pretty new. Back then, you couldn't just go find a co-works to put an office. Back then, if you wanted an office, you had to sign a 5-year lease. You were coming up with big money. There was no VoIP, voice over IP for phones. You had to go call Mob, Bell, and Verizon, and it was astronomical. So it was a bit different compared to how it is today, which is interesting. But that's how we started. And then, the crisis of 2008 took place. We've been in the mortgage business the entire time, never really left the mortgage business. So obviously things pivoted and changed to make it through that period. I then went back and got a master's degree from Rutgers Executive MBA program, which is a fantastic program, really great professors, great program. We spent some time in China studying. It was just a great experience. And come back and along the way picked up the real estate license as an agent, subsequently got the broker's license. Along the way did a bunch of flips. So buy, fix, and renovate homes, sell those homes. So I've done the loans for my clients. I've also used them as an investor myself. And now fast forward to today.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
We rebranded the company 2019. We have offices in New Jersey, one in Florida. We have a office in San Juan, Puerto Rico. And, we service a number of different states in the country. And, we're looking to grow. We're looking to add loan officers to our team. I think that we've proven that we're a great place to be. We've been here long enough. It's time to kind of add some folks to the team, which we've been doing. We also have a real estate arm, which we added in a couple years back. So we have a franchise now, and it's a pretty good company there, HomeSmart. So we'll see what we do there. But yeah, it's been a wild ride, and we're still going. So we got a lot more to do.
Awesome, Bill. What drove you to start your own company? And was there kind of like a defining moment in your journey that you knew that was what you wanted to do?
Yeah, I would say, my father had his own business for a period of time. So I think there is something about entrepreneurship that can be, passed down. I don't know what the word is there, but so, knowing that was something that was in the family. When I was young, that was no longer the case. So it wasn't like he had a company himself forever. He did have it for a period of time when he was a younger man, and then he changed later on. So I guess it was a little bit in my blood. And I thought, when I was at Chase, that as much as I love working at Chase, I was young, and I thought, okay, I can try this, and if it doesn't work at that point in my life, I was able to take some risks, because there's less big consequences when you're in that position I was in my life. So I thought, okay, let's give this a shot. And I like the idea of having my own little company. I like the idea of designing. I like to build. I'm kind of a builder. So I like to build things. Used to be Legos when I was probably like 5, and parlayed that into business, right? So building these little businesses, and, my perspective has changed a bit as I've gotten older, but that would be probably where it came from. I felt like I could do it. I thought it'd be an adventure to try. I like the idea of building something, and that's kind of, I guess, the origin of where it came from.
That's really cool. I know you guys specialize in working with first-time buyers and investment portfolios. How do you balance both of those worlds?
Yeah, so a first-time buyer is going to be completely different from, a savvy investor. I mean, the way we balance it is, the bottom line is investors care more about the numbers. They want to know, what's the deal? How fast can you do it? How affordably can you do it? And typically, once you've built a relationship with them, there's a level of trust where it's like, Bill, I got this deal. This is what I need. Get it done. And we go get it done. With a first-time buyer, they're like walking through the woods blind. Like, they have no idea what's coming. So there's a lot more hand-holding. There's a lot more explanations. We handle it with, I still do a lot of phone calls. I'm constantly, all day long in the office on calls, so, we leverage technology. We make, now I've done some of the, basic stuff. I've done video recordings where people can listen and watch a recording, but I don't really try to push that on to the client too much, because a lot of times they're like, okay, that's great. I watched the video, but I want to talk to a human, right? There's still a desire to get answers the way we're talking right now. So it's really just a matter of, coordinating our schedules to make sure we're able to. I do a lot of work on the weekends. I do work after 5 o'clock. A lot of the calls, because a lot of people have jobs during the day, right? So they're at their job, and they may not have the ability to get on the phone with me for 45 minutes to ask me how do escrows work, and what's the interest rate going to be, and what's a buy down, and how about a seller's concession.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
So, we work with our clients to make sure that we're providing a service that keeps them happy. And that's just the nature of the business. I could box it up and make it really automated, but at the same time, then you're going to lose some of what people come to us for, so.
Right. I'm sure people really appreciate that personalized touch. With all the different markets that you work in, how do you tailor your approach? Are there different challenges that you have to be aware of in each market?
Yeah, for sure. I mean, just the way a closing is done is different state to state to state, right? So, I mean, luckily we have very good partners in pretty much all the markets we're in. But just to give you an example, even for example, New Jersey, northern New Jersey operates differently from southern New Jersey, and New Jersey's a pretty small geographic state. Now, New Jersey's actually large when you look at how many humans are there, but as far as geography, it's pretty small. So you would think, how could that possibly be? But that's just the way it is, because northern New Jersey and to an extent central New Jersey, which for New Jersey people, central Jersey is real, okay? We'll have that debate later. Northern and central New Jersey will mimic New York, which means there's going to be an attorney. So when you buy a piece of property in central or northern New Jersey, typically you're going to have an attorney as the buyer, and the seller's going to have an attorney that represents them. Now, if you go down to South Jersey, 856, 609, those are area codes where everybody roots for the Eagles and the Phillies. They don't use attorneys. I mean, attorneys exist. There's surely attorneys in South Jersey, but in the real estate transaction, it's not typical. So who's doing that work? The real estate agent tends to do what in North Jersey the attorney would do. So the realtors are doing more work than the northern realtors. Again, it's just because of the way New Jersey mimicked New York and South Jersey mimicked Philadelphia. Why it unfolded that way, we'd have to dig in. I don't know the whole history of it, but that's just how it is. So yes, so then Florida has different, taxes that are collected at closing. Pennsylvania has very high school taxes that are collected at closing. New Jersey doesn't have that at all. So a lot of times a closing in Pennsylvania, the closing costs can be pretty high. Even if the property value is, let's say, equal or less than what's in New Jersey, you'll see higher closing costs because they have a lot of different stuff that New Jersey doesn't have. Just to give you a quick example of a difference. So that's the same all across the country, all different ways. People say close of escrow. There's wet states, there's dry states. So yeah, I mean, you do this for 25 years, you learn all this stuff,
Yeah. Yeah, and knowing those things, I'm sure can make or break a deal.
Oh,
Bill,
yeah.
we have a lot of investors that listen to this podcast too. How do you help them structure financing to maximize returns without over leveraging?
I mean, the classic answer is you make money in real estate when you buy. So you really have to purchase as cheaply as you can, right? I mean, in an ideal world, you're buying 50 cents on a dollar. Easier said than done, right? Especially in this market. I mean, I'm working with a guy right now, and one of the criteria for when we do renovation, like an investment property, let's call it a fix and flip loan, because that's the terminology, renovation loan, whatever you want to say. One of the criteria that the underwriters are going to look at is how many of these have you done? How many fix and flip deals have you done in the last 2 or 3 years? And if you've done like 10 plus, you're in tier 1. If you've done 2 to 3, you're in tier 2, and so on and so on, these different tiers. And obviously the higher the tier, meaning the more experience you have, typically the better pricing you're going to get, a little bit better pricing you're going to get. So one of the guys I have now, he's been a contractor for 40 something years. I mean, he's been fixing homes unendingly, but in the last 3 years, he hasn't flipped a house.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
And the answer why he hasn't, when I asked him, is because he just hasn't found any good deals. So sometimes you got to go to the sidelines, right? You don't want to do a deal for the sake of doing a deal because you get that itch, I got to do something. Because if you overbuy, if you overpay for a property, it can, not necessarily, but it can become a problem if anything goes sideways, So I think the key is, trying to find value in the properties you buy off market, or it could be on the MLS, but it just has to be a discount from what the retail price would be, and as steep a discount as you can find, unless you're going to do some kind of a different place. So there's a play called add a level, where you'll take, let's say, a Cape Cod or a smaller house, you'll rip the roof off and you'll add a level, or you'll expand the home. So now your ARV is going to dramatically be larger than what that would be if you didn't do that. So maybe you're paying a little more in premium up front for that house, but you're not just renoing the existing home in that store. You're expanding and changing the entire footprint of the home, which means you could really possibly double, triple, maybe triple the value, depending on the market and where the home is and all those other factors. So
Yeah, that makes a lot of sense. Bill, with all that you see at Aceland Mortgage, what's the biggest challenge that you see in the lending market, and how are you navigating that?
So is this, okay, the lending market is pretty vast. Are we talking for primary homeowners or investment? I guess I could give you both sides. I would say, and we talked in our little pre-talk about it a bit, I think affordability for a residential primary home story to that question, I think that a huge issue is affordability in the country. It's been an issue, and I think that I don't know how we get out of it besides building our way out, right? So I think that's a bigger problem for just people on the lending side to focus on. I think that requires the government. I think it requires builders themselves. And I think that there needs to be a cooperation, a harmony there. For example, I think there could be some kind of a program where, the leaders, whoever you want to call them, the governors, the governors of a couple of, let's say, big states get together and they sit down with the leaders of the biggest home builders in the country. And they say, how do we solve this? Like, let's sit down and figure this out, right? And if it means giving the builders some kind of financial incentives, possibly some kind of tax break, cut back some of the regulation. Now, you're building homes, so there has to be, you can't just put up pieces of junk, that you can't cut corners on safety and stuff. But there's got to be a way for the two sides to get together and kind of cooperatively work together to build affordable homes. And I think that would be something that could help in the challenge of lending, because what we see is, DTI debt ratios, I think they're much higher than they've ever been, right? So you're constantly bumping up on the top of what that DTI should be. And it's unfortunate because every time someone's doing that, it means they're biting off a big chunk of their income to buy this home. And I just philosophically believe that your housing shouldn't be a cost that causes so much stress and strife in someone's life, right? We have so much other things to worry about in our lives. Putting a roof over your head shouldn't create undue stress, right? There's already obviously stress involved in any of the, in just living in general. But if we could alleviate that, I think that would translate into better DTI ratios and more affordable housing, I think equals better lives. And I think if our goal is to help people, I always say it, right? One of my big things is it's not just about achieving homeownership, it's about maintaining homeownership, right? So if I can be creative and get you in a home, but then you're like, drowning in the debt of that house only to lose it down the line because it's too expensive, that's not the goal. I mean, it's not my goal. I don't think that that's anyone's goal. And we need to figure out how to fix that. And I think it's a big question that, it's going to require America kind of getting on board with this, So,
yeah.
For the investor side, okay, so, I would say short-term rentals, I wouldn't call it a challenge. It's just a new thing, a phenomenon that's taken place, and it exploded post-COVID when everybody, wanted to travel because they've been locked up in their house for 3 years, 2 years, whatever it was. So then you had this huge rise in investors buying homes, turning them into Airbnbs. And then there's, all these people on the internet. You can be an Airbnb millionaire. You can host all these homes. And if you look at the history of Airbnb and VRBO, which actually came before Airbnb, I would say it was supposed to be someone's has a home and they want to earn an extra couple dollars. So they're going to rent out the garage apartment or the basement apartment for a few bucks. And you as a traveler would say to yourself, I can stay in this person's home for half the price of the hotel room. All right, I'm saving half the money. I'll sacrifice on some of the amenities and I'll stay in the person's home, right? And it's a little weird in the beginning. Are we couch surfing? Are they murderers? Whose house am I staying in? And now there's a weird thing where the hotel is cheaper than the Airbnb. Sorry, why am I staying in an Airbnb? Why am I staying in Betty's basement, right? For more money than it costs me to stay at the Hilton. I'm not doing that. So I think Airbnb has a different problem. All these hosts don't understand how math works, right? I have to pay this cleaning fee that costs as much as the Hilton. Why would I ever do that? The whole concept was because it was way cheaper. That was the win. Now, if you want to rent the whole house and you're splitting with people, I think there's still that could fit in there. So I think that short-term rentals from a lending perspective created a new quandary, because typically if you're underwriting a rental property, you're looking at leases. Right? So we know that the houses in this area rent for $1,500, $2,500, $1,000, whatever the number is, and we can do our math and we can figure out our debt service coverage ratio, DSCR. Now you've got this short-term rental. There's no lease. So how do you prove what is the income going to be? It's changing. The industry is maturing. So there's a company called AirDNA, which is now tracking this data. So now you can go onto AirDNA and you can pull the data, because they now have some data, and they could say, well, houses and vacation markets, I think, are the first markets to really provide a lot of data, because it really is a short-term rental. People are going to, whether it be the beach, the shore, to the ski mountains, whatever the case may be. You can look and see, okay, we've got AirDNA telling us that this house should rent for this amount of money. We have data to back this up. So I think that on that side, that's been an interesting thing. Appraisers are adjusting for it, right? They've had to write different appraisals. How do you value something if the rent is short term is X, but long term it's Y? Like I'm doing one right now, and it's at the shore, New Jersey, and you've got, if you think about it like this, and the top half is the summer, and then you've got the fall, the winter, and the spring, right? You've got 4 seasons, and the top season is the moneymaker season. So May, June, July, you're renting it by the week. LBI, people rent houses by the week for $20,000, $30,000. And then in the winter, that same house would rent for $3,000 for the month. So you have to analyze the cash flow, to analyze how you're going to lend on it. You're going to have to take all the money from the hot months, and then you're going to have to take all the money from the low months and do like an average, and then apply like a vacancy factor, or apply, a cost factor, because if it's Airbnb, who's changing the sheets? That's the thing. Airbnb, you're essentially a hotel now, right? You've got to have someone make sure that the sheets are clean. Like if I'm renting your house for $30,000, I expect there to be clean towels, fresh soap. You know what I mean? That's a lot of money.
Mm-hmm.
These need to equate to what I'm paying. Betty's basement, maybe I bring my own towel, but
Bill, I wanted to ask you, with all your experience that you have personally as an investor, I'm sure you got a story to share. Was there a deal that happened that was like a big learning lesson for you? Maybe something happened and you had to pivot fast. You got any moment like that?
How long is this podcast? Yes, I definitely have some learning lessons. I'll give you a snippet on one. So, I mean, this is, it's really a lot of it's, I take responsibility for nobody put a gun to my head. I made all these choices myself. I mean, what happened to me is not necessarily my fault, but I made the choices that put me there. So at the end of the day, whose fault is it? So, without going too deep into the story, because it is a bit of a saga, I had partnered with someone who I knew from social circles that run in the real estate world. I had not heard anything bad about this person, so I had no reason to doubt their skill set. And if you were to look up what they put out to the world, you would think clearly this person's a professional. I wouldn't go so far as to say expert, but borderline expert, like definitely not a novice. So the idea we had come up with is that this person would be on the ground, because, I wasn't geographically nearby during this period of time. So my thought process was, I knew the market where we would be doing these deals. So I was very comfortable being in that market, and they were going to be the boots on the ground. And I was going to be, because I have good credit and I know how the loan and the financing works. So it was a natural fit. You're the person who runs the crew, which is what this person does for a living. So it's like, I mean, to me, it was a match made in heaven, in the sense that we brought 2 different skill sets to the table. And I was looking for a long-term partner whereby we could do this, repeat, do it again, repeat, and it would just be a thing we do to build a portfolio, right? It was a win for the person, a win for me. So we purchased a home, right? So we have a corporation, LLC company. We buy this home. Again, all my money, my credit, all my stuff, and they begin to execute on the renovation of the home. It's a 2-family home. This is not building the Taj Mahal. This should be a really cookie cutter, kind of an easy deal, really. So, months have gone by. There's draws being done for the renovations. Again, I'm not physically around to physically check on it, but I don't really have to, because in my mind, I trust the person I partnered with. So what happens is, someone else who works with me for one of the companies is physically also nearby. They drive by and they see that there's an orange sticker on the wall, on the door, the window, whatever. So that's a signal of a stop work order. It means something's not right. So, I call the person and I say, hey, listen, what's going on with this? And, I don't know. I'll check into it. Let me get back to you. Okay. First of all, why don't you know? Second of all, okay, well, please hurry. This is not good. Let's figure this out. And it turns out that no permits were obtained. So then I'm like, well, what are you talking about? Like, what? Why not? Oh, we don't need those. Okay, well, clearly the town thinks we do and they're in charge. So what are you talking about? No, we don't need them. Okay, well then you go figure out why you're saying we don't need them. They say we do need them. Let me know what's up. Clearly we need them. Just a moron. So, in an effort to save time, I'm going to condense the rest of the nonsense. So then there was fines involved because each day that this is outstanding, you collect fines. So then I had to deal with, trying to, negotiate that. And I had to go to court. I've never had to do this with someone. I had to take this person to court to get control, to basically be able to take the job back over and finish it myself without this person's involvement, which the judge granted. And then, there was about 120,000 that had been taken without 120,000 of work to show for it. So now our reno budget is dramatically nowhere near where it's supposed to be to do the actual work. This is a huge, major problem. In addition to the monthly payments that I have to make, the tax payments that have to be made, the insurance payments that have to be made. I mean, it's just like a lot of stress and a lot of pressure. This was not as colorless as it was prior to this event. So going to court, I mean, this was just very stressful. I mean, this was like crazy. We got control back. We had to hire a new construction team. I had to get additional sources of capital because the money that was allocated for this is now basically gone. And then, we're over budget, we're over time. I mean, it's just like, if you could check off everything that was like how it's not supposed to go. So, I definitely learned a tremendous amount from it. The house, eventually sells and, it was just a very trying time. And it's definitely something that if anybody from the audience wants to learn more about, I'm happy to go into how to not do that for your particular deals and what you need to have in your checklist so that you don't make that same mistake, right? I was a bit naive, and I shouldn't have been for as much experience as I have and for how long I've been doing this. I don't know if I felt invincible. I don't know if I was being too loosey-goosey, shooting from the hip with my thoughts. I'm not really sure, but definitely from that experience, I've put in, layers of protections for doing it again that so I would hopefully never have that happen again. So it was definitely stressful and I wish that on no one. I hope no one has to go through that. So please, I can definitely help you if you're planning on trying to partner with somebody and, how to have the proper agreements. We had agreements, but they just weren't, you need better ones. And I've since gotten a lot better stuff. So yeah, it was interesting.
Well, Bill, looking ahead, whether it's investing or with Aceland Mortgage, what do you see on the horizon? What are you looking to do in the future?
Yeah, so now, I just finished another project. So we have, our headquarters is in San Juan, Puerto Rico. So I live down here. I go back up to some of the other states we work in now and again just to visit people and say hello. But so down here, I did a couple deals. I recently with partners. Here's an example of a good experience with partners. So these guys were great guys. We bought a 12 unit together, which was abandoned, and in Puerto Rico, it's definitely different from the States in terms of construction, right? So here you're dealing with a lot more concrete. It's really not a lot of sheetrock at all. So it's a bit of a different construction process. And, we bought a 12 unit that was like, that had been uninhabited for 10 years, something like that, 15 years, whatever it was, renovated it, got it leased up. And we were planning to hold it and just have it be a property in the portfolio, which it was basically at that point it was. And then we got an offer that was a very good offer. It was a cash offer. And the partners asked me, what do you want to do? I said, I'm down, whatever you guys want to do. And they were like, yeah, let's sell it. Let's make our profit. Let's move on. I was like, sure, no problem. So we sold it. So I took some of that money back. I have another one down here that I'm about to try to begin a refinance on. So I'm looking to do more deals. I'm looking to do more deals here, but also definitely stateside. I'd love to do some deals in Florida, maybe Tennessee, Texas, perhaps. So I am looking to possibly find some people to work with on that. I have some investors now who are interested in doing this. We're looking at putting together a fund. So that's kind of being put together for hard money, for private lending. It's kind of been floating around. We just kind of got to formalize it more. So that's kind of being put together. We're looking to grow our loan officer count of people. So we're hiring people now. We have a bunch of new people coming through. We have a training program that puts you through a whole process on how to come from nothing to something We also hire experienced folks who are just not happy with where they are for whatever that reason might be. I think that we built a very good place to work with a good culture and good people. So if somebody's an experienced loan officer and they are looking for a potential change, that's another thing that we're doing. So that's it. I'm focused in my real estate and mortgage dealings, looking to do more. I'm looking to help more people, right? So if someone wants to do fix and flip, we can provide the financing for that. I'm still looking to be the loan officer of choice, whether that's your program, whether we do a lot of reverse mortgages for elderly people. We do all that. Like I said, we do all of the traditional stuff, Fannie Mae, Freddie Mac, FHA, USDA, VA. So VA loans for veterans. We do that whole gamut. So definitely still looking to just help as many people as we can, keep building that client base that we've been working on for 20-some years.
And Bill, hey, before we wrap up, if someone wants to reach out, maybe they want to collaborate with you on a project, maybe they want to specifically work with Aceland Mortgage, what's the best way for them to connect?
So you can get me on Instagram. It's at Bill Speaks Mortgage, which is Bill_Speaks_Mortgage. You can also find me through our website, acelandmortgage.com. That's www.aceland, ACE, like Ace, Land, LAND, mortgage.com. So you can hit me there on the, contact us button, and it'll get to me, or you can hit me direct on Instagram at Bill Speaks Mortgage. So those are two easy ways to get me.
Perfect, Bill. Thanks so much for dropping all this knowledge today. I love all the things that you're doing and how much you care about building those client relationships. It's really inspiring for people who are new to the game.
Yeah, we love to help people. Our goal is one thing with first-time buyers. If they haven't purchased a home yet, we have a strategy, and an order of operations matters, right? So we take the client through how to take step 1, step 2, step 3. And if you go through these couple of steps by doing it in this certain order, if you're willing and wanting to be a landlord that owns property, we can show you how to do it in a way that allows you to put down a relatively small amount of money. And in the long term, you can build, real wealth relatively quickly. So that's something that, and not only do I just talk about this, I did it myself. Like, I do what I say. It's not just talk. Like, I live exactly all the things I'm saying. Like, I own a bunch of multifamilies. I've been through all the renovation hardships, like the one I mentioned. We've had a lot of good ones too. That was actually the only one out of all the ones we've done that kind of went sideways. So track record's good. And, we just want to help more people. That's it.
That's awesome. Yeah, you don't just talk the talk, you walk the walk, Bill. For everyone tuning in, if you love this episode, make sure that you're subscribed to the Real Estate Pro Show. We've got more conversations coming up with heavy hitters like Bill Halick, who are out there building incredible real estate empires. We'll see you on the next episode.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.